sponsored by the Securities and Exchange Commission of Nigeria.
Hello and welcome to Eye on Nigeria's capital markets. I'm Wole Famurewa and thank you very much for joining us. Managing money is an essential skill that often makes a difference between prosperity and poverty. In today's program, we explore financial planning in Nigeria, looking at the tools and institutions helping Nigerians create a better financial future. Like in most parts of the world, Nigerians long for the finer things of life. Cars, houses, a quality education, and early retirement are just a few items high on the scale of aspirations. But a lack of the basic knowledge and discipline required to grow and manage wealth constrains many people. Financial planning is a culture yet to take root in Nigeria.
Culturally, financial planning has not taken root in Nigeria because of the way we are culturally. I mean, you have husband and wife living together, they don't even know what they earn. At least I know several friends that their wife don't know what they earn, or they don't know what their wife earns, so they are not even concerned. So there's that transparency. You can't go to your doctors and cover up your disease or whatever it is. A financial planner is in that ilk. If you're going to go to a financial planner, you're going to have to level up and tell the financial planner everything about your finances. What are your plans? What are your aspirations? What do you hope for? And we don't open up like that in terms of our income.
It starts with financial literacy and the structure of our industry in Nigeria. Financial literacy is the ability for somebody to understand how they earn money, how they spend the money, how they invest the money or make more money. But from our understanding at the moment, a lot of people don't really understand that. Secondly, the structure of our industry, whether it's banking, insurance, asset management, tax planning, risk management, everybody has worked in silos historically. And what we need to do is bring those together before financial planning can actually take off.
There's the issue of financial inclusion that we talk about a lot. Just trying to make available the various products and services for the adult population across the country. They need, savings products, credit products, insurance products, pensions. All these are so important. Because of the infrastructure challenges that we have, it's sometimes difficult to ensure that these products are available throughout the country. Remote parts of the country, banks are doing their best to have branches. We have hundreds of branches across the country, but there are areas where there's no bank branch.
We equally have that belief in Nigeria that we're going to get rich one day, whichever way. I mean, you've seen people, it's happened to people. Today they are driving a Volkswagen Beetle, the next day they are in limousines and stuff like that. I mean, the get rich quick syndrome is obviously affecting financial planning in this country.
There's also the education, lack of knowledge. Most people just don't know about the products and services that are available. And this makes it very, very difficult for them to be involved in the whole financial system. And, there's clear evidence to show that where you have adequate financial services, there's a corresponding increase in economic growth and wealth creation. So it's really essential to have these tackled to address the poverty issues in Nigeria and across the continent.
The situation in Nigeria is a sharp contrast to the practice of financial planning in many parts of the developed world.
I think the most advanced market is South Africa. The financial planning industry, which is an aggregate of pensions, life and mutual funds, about $800 billion, is very big and is far outstrips the banking industry.
You have certification, the way you have the stockbrokers having their exams and the bankers and so on, the CFA. The financial planners will have a certificate. So when you are hiring a financial planner, they will be certified. You'll be better equipped. It builds more trust because they are equipped to proffer solutions to your financial needs.
Right, Nimi, if you can tell us, what exactly does a financial planner do for an investor?
Well, I'll first define financial planning, which is an ongoing process of managing your finances to make sure you can achieve your life goals. So if you are able to get a professional financial planner, they will look at your own unique situation and then proffer solutions by looking at all the different products and services and see what is most appropriate for you at a particular time in your life. Most of us just don't have the time or expertise to do all this ourselves, so it's very useful. Right now, it's our bankers and our stockbrokers that assist. But really it's not enough because they're missing out the insurance needs, and real estate needs, estate planning needs, which a financial planner would address.
You could plan to finance something like vacation or to acquire a residential home. Also, you plan against loss of income. But more importantly, and I think arguably the most important thing you plan for is retirement. So what the Retirement Savings and Pension Reform Act did was to formalize that process, to make it compulsory in a sense, to force Nigerians to plan for retirement, to plan for their future.
As an individual, first of all, you would have short-term, medium-term, and long-term goals. And what a financial planner is meant to do is create a financial plan for you to bring in and ensure that you meet all these goals. Now, within the financial planning framework, as I said earlier, right, there is banking, there's investments, there's tax planning, there's estate management, and for those who run a business, there's business succession planning.
The stock market crash of 2008 dealt a tough blow to investors. Many were caught in the euphoria of a bubble market. When it all came crashing down, they lost their life savings and incurred huge debts. While a market crash is not always easy to predict, the hardship it brings could either be avoided or better managed with the guidance of a financial planning professional.
If financial planners and investment advisors have been utilized in the last 6 or 7 years in the markets, in Nigerian markets, a lot of clients, a lot of investors will not have lost what they lost. Because what really happened was misinformed exuberance. Now, are we saying people won't lose money because financial planners because they are financial planners? Are we saying markets won't go down? No. Markets will always go down. But financial planners are there to help you plan so that effects of downward markets do not wipe you out. Someone was worth 100 million and the whole 100 million is sitting right inside the stock market. That's that's the biggest folly of investments, diversification.
Everybody heard the story of wealth being created, and everybody jumped. What a financial planner would have helped or assisted somebody in doing is determine what your objectives are. Why exactly are you investing in the various markets? Now, I know it is the stock market that crashed, but let us look across the spectrum. The moment interventions came in the form of the central bank, interest rates crashed, right? So it was not only the stock market that crashed, interest rates crashed. And if you look at pensioners, for example, if they were earning money, which basically meant they were earning 12, 13% before, all of a sudden that came down to about 2 or 3%. So a financial planner would have helped people sit down through those short, medium, and long-term goals, help them set, right, that, okay, stock markets do crash, but here's an opportunity for you, right, that don't worry about the crash, don't just pull your money out. It may be an opportunity for you to buy, especially if you're investing, let's say for the long term, for your child's education, or for the medium term to buy a house.
Financial planning is not restricted to the rich or middle class. It's really something that everyone should think about.
Financial planning eases the stress levels, whether it's a low-income earner or medium. A high-income earner keeps on aiming higher. A low-income earner keeps on aiming higher. So yes, the ability to earn it and spend it, or the thought of earning it and spend it because I don't have something to live off for the next day, is generally there, but it doesn't only happen in Nigeria. So in terms of a financial planner helping the low, medium, or high income earner, it is generally for one, it reduces your stress level. Two, it allows you to plan for what you want for yourself, what you want for your family.
But the value of financial planning is not limited to the individual. It's a culture that has created an industry in many parts of the world and an important factor in the growth and development of the broader capital market.
We have a big issue in the world today, creating sufficient jobs, particularly for our teeming young people. And in Nigeria, it is something that the government has been very focused on. Financial planning can create jobs. Think about where you're deploying financial planners across the nation to support people in their decisions about insurance, about owning a bank account, about mortgages, about saving a bit in a mutual fund. That creates job opportunities. On a national level, one of the things that we're trying to do is improve financial inclusion, but also improve domestic savings. If you go back to what will unlock Nigeria's potential, critically infrastructure, if we had more savings domestically, we'd be able to deploy them to tackling the infrastructure challenges we have.
With the accumulation of pension funds, we are beginning to see new types of products. First of all, the very basic ones, we're seeing a robust treasury bill market and the government bond market, which allows you to buy bonds for as long as 20 years. And in other words, because bonds are a cornerstone of retirement savings planning, because you're able to match your liabilities with your assets. But beyond the traditional product, we're seeing the introduction of products like the ETF. ETF is a passive way to gain access to the stock market, to the index, and it allows very retail investors, knowledgeable investors, access to the index. We're seeing the growth in the mutual fund industry, albeit very early beginnings. We're seeing the introduction of money market funds. We are seeing introduction of real estate investment trusts, and we are seeing also bond funds. Now, what these things have done is that it again allows people that ordinarily would have invested monies in the markets to come into the market. We are seeing increasingly disintermediation of banks, because those monies are moving away from low yield current account and savings account balances to this new product.
What I see happening is more organizations having a basket of products that are tailored towards events, children's education fund. You could begin to see marriage funds, people that buy funds that are tailored towards you planning for your marriage. So you're going to begin to see a lot of, we need to begin to see a lot of event planned funds or investments, to investment plan towards certain events. And that way, we can begin to see the middle class can begin to buy some of these things. Funeral, I'm sure I know nobody likes to die, but I know we're having a hard time selling funeral insurance in Nigeria. But these are things that other societies are already selling. You need to begin to plan for them. Some of these products exist, more will come, and it's in all facets. Mortgages. Now with the trust of the government towards the mortgage financing company that has been set up, mortgages are going to become easier. They're going to become easier. Depending on your class, there's a middle class, the higher end, the lower end of it. The mortgage is going to become easy, and you can do what you need to do and plan for the future. It's going to get better. Right now, we have over 40 mutual funds. 10 years ago, we didn't have 10.
Considering the potential impact of financial planning on people and the capital market, stakeholders, including the government, regulators, and capital market operators, have a role to play in promoting financial planning in the country.
For example, you've got to talk about the minimum wage. People have to be paid at least a minimum wage that they can afford to put a bit aside.
At some point in time, I know in the next maybe year or two, you will see the Securities and Exchange Commission come up with rules and regulations of how financial advisors, or they may be renamed financial planners, are supposed to work. Because under the Capital Market Committee, everybody is meant to be working together. So whether it's the asset managers, whether it's the trustee services, whether it's the stockbroking community or whatever, you could then have the financial planners out there working together. So I think over time, you will see that the regulators, as we know, may actually come up with something to pass on to the government, whereby we then have a professional body out here. One thing that is lacking, or I think is lacking in Nigeria, is the ability for people to go into an institution and actually say, okay, you know what, I have this challenge, right? I want to invest. I've been left an inheritance. What do I do with it? And that would be for a financial advisor or a financial planner to actually help people. So, but people need to be confident that whenever they go into that institution, there is the rules and regulations and the guidance, and this person has gone through proper training and hasn't just woken up and decided that, okay, I want to be a financial planner.
As you know, we've asked the industry to work with us on developing a 10-year master plan for financial literacy. For us, that's the beginning, because you need to match financial literacy with financial capability, and then you need to provide an environment where people are supported in developing skills and financial planning. One of the things that we're working on now is to revamp the Nigerian Capital Market Institute, and my wish is that that institute will also provide certification on financial planning. That certification will mean that we have a good pipeline of people who can provide financial planning skills.
There's a lot that can be done. Education is a major thing. It's so exciting in the UK. Just this week, financial planning, personal finance has been put in the national curriculum. And just a year ago, the Central Bank of Nigeria was talking about that and has been collaborating with the Ministry of Education in Nigeria to see how we can do that as well. That goes a long way, because if children can be taught some of the principles from their earlier stage, it has huge implications for their financial future. They won't make the mistakes that so many of us make as we go through life, because they'll just understand the concepts better.
After the break, we hear more about the impact of financial planning on a business owner, and also run through some of the opportunities that you may be missing in Nigeria by not engaging a financial advisor to help you manage your money. This is Dikpo Davis, a successful entrepreneur. His decision to walk away from a relatively good job almost 2 decades ago to start a real estate magazine was a big risk to take at the time. However, it's a decision made with a strong focus on the future.
As a result of some personal issues with the last company I worked with, I had to leave the company. And the question was now, what was the next job? And well, the job didn't come. So the idea was very simply to do something, as the saying goes, do something while you're waiting. The key thing, even at this point, was if you set up this business, right, was it going to be able to take care of you? Was it going to be able to take care of your future? I think financial planning is closely linked for me with vision. Okay, where are you going to be in 5 years' time? Where are you going to be in 10 years' time? Where are you going to be in 20 years' time? Because you cannot plan without a target. You cannot plan without knowing what you want to do. And obviously your targets are as a result of your thinking, your culture, your orientation, your background. So for some, retiring to the village is an option. Others want to retire to the posh parts of town. They're going to have two different, or they should have two different approaches to the kind of property they invest in, the kind of business they do, the kind of money they're expecting. So for me, I was now faced with the clear realization that the path of management to retirement had gone. So I now had to look at the business, and the first question I had to ask of the business was, could it sustain my family and have a little more to put aside to invest for the time when obviously I wouldn't be able to work? And that question has always driven my actions, the way I plan stuff, the way I save, and the way I work.
Beyond meeting the need in the market and following a growing passion for real estate, Dikpo's risk-taking by investing in a new business is underpinned by a desire for a better financial future.
My own goal has always been retire early, retire comfortably, and my lifestyle must not diminish when I stop earning. So that means that part of what I'm earning now, a bit has to be put aside towards that pot for those future years.
Dikpo's story may not be the typical rise to wealth story, but shows what can be achieved when a clear and realistic plan is in place. Elements of financial planning include setting financial goals, a careful review of your financial situation, preparing a plan to allocate resources, select the right financial instruments to invest allocated resources, and lastly, monitoring the portfolio with a view to making changes over time. 15 years on, Dikpo's investment decisions appear to have paid off. He can now see himself achieve some of the financial goals that seemed so unlikely many years ago. He cites having a financial plan as a critical success factor.
The plan of retiring early, or for me, the plan of retiring early meant that I had to reinvest. The holidays had to be pushed forward. Well, the cable, we could afford it after some time. But basically, most things had to be pushed forward in terms of enjoying, so that we could use that as capital to build the business. And then 15 years down the line, here we are.
The evolution of Nigeria's financial market is creating opportunities for discerning and informed investors. But a lack of information on trends in Nigeria's property and real estate market, for example, means that many unguided investors fail to tap these opportunities.
Well, these trends are just new in Nigeria, but they're known globally. Rent to own is an initiative promoted by certain kind of developers, which are here currently exist in Abuja. And then with the Lagos Homes project coming on board, they're also exploring options that can allow some of their subscribers benefit from the rent to own scheme. It's just a simple program that allows you to take your annualized rent and then use that to service your mortgage requirements over a long period of time. So those are some of the schemes in the market. You also have what we call a lease to buy, whereby you structure a long-term lease with a premium that allows you to own the assets at the expiration of the lease. Thereby, the comfort the buyer gets or the seller gets is that there's someone that is definitely going to buy his assets and is already making some contributions to buy those kind of assets. You also have investment club home ownership, where a group of people come together, develop some houses, and then they can split it amongst themselves, depending on the convenience of their requirements, which is either a flat or a terrace, as the case may be.
There's the home owners mortgage scheme, which gives allows people over 10 years to pay for houses built by government in government estates. So that is something to watch out for. The government is committed to it, from what we can see on the ground. And then the federal government has come up with a very interesting scheme to refinance mortgages. The Nigerian Refinance Mortgage Corporation is something that we're very enthusiastic about. And in fact, we are tinkering with the idea of christening 2015 the year of the mortgage.
Opportunities also cut across the asset management industry as more products are created.
We have some great products out there. The mutual funds are among my favorite, because you can enter the stock market with relatively low sums. You know, some of the mutual funds you can go in as low as 10,000 naira, and others about 50,000 naira. So if you put something in place by a direct debit, perhaps, so that every month money is going out in the stock market, or quarterly, biannually, it's just important to save on a regular basis.
2008, everybody wanted to invest in the stock market, but how far can your money go? 100,000, how many stocks do you want to buy? Now, mutual funds, for example, there are various mutual fund products out there, starting from the low risk, medium risk, or high risk. Low risk, you start from money market funds. Medium risk, you start from bond funds. High risk, you start from equity funds. Then you transit into maybe insurance products, right? There are also equally savings products within the insurance industry for the low, medium, or high income earner. There are insurance products that you need, whether it's just third party for your car or comprehensive for your car within those spheres. You have trust products as well, right? You have trustee companies who can actually help you write wills, or who can create trusts or inheritance products for you.
Even the rich experience problems transferring wealth. Financial planning experts are able to help the wealthy avoid common pitfalls such as the transfer costs of property.
The wealthy class, I find one of the most obvious, is estate planning, not planning for that after your lifetime, your legacy, leaving things in a total mess for your beneficiaries and your heirs. We have terrible stories of people passing on and what happens to their children and their grandchildren, their spouses, and so on. So it's very, very important that we learn to plan for after our lifetime. No matter how much you have or how little you have, it's important to have a will in place, or a trust, or some vehicle to pass on your assets and what you've spent so many years building.
There are rules and regulations around probate and how things are distributed. One thing we don't take into account, and I know last week I read a report that the Federal Indian Revenue Service is now on a drive to increase taxes. One thing we haven't looked at, or we don't look at, is inheritance taxes. By proper planning, doing estate management, you can plan to mitigate or reduce those taxes. If not, the full weight of the law will just come and tax your estate, right? And what that involves sometimes is if you have a house that has been that is being passed to a next generation, if they don't have the cash to pay those estate taxes, they're going to have to sell the house. And that may have meant that a house that had been in generations, right, all of a sudden, just because you have to pay taxes, just goes out of the window. So, and then in somebody's lifetime, you can have a living trust, for example, whereby if somebody's demise then happens, things just continue, because then you don't have to start thinking of child's education, because if it's already in that trust, the trustee just continues to pay.
My own wish is that it will become a national emergency to tackle financial inclusion and therefore focus on financial planning.
Financial planners play a key role in the creation and management of wealth. However, it's an industry yet to take off in Nigeria. Stakeholders in Nigeria's capital market are working towards developing this important segment of Nigeria's financial system. Progress could mean the difference between a life filled with misery and unfulfilled dreams and one with the type of prosperity that allows investors like Dikbo face the future with a sense of security. Wole Famurewa, CNBC Africa.